Hey guys, you're welcome to this channel. So today we're going to take a trade commentary of a trade I took yesterday on the GBPJPY. all right, and one of the reasons I had to shift from trading GBPUSD to GBPJPY is because we are crossing the end of the year, and usually there is going to be profit taking on all dollar associated pairs, and so the dollar is going to pose some level of indecent price action, especially in the month of December. Okay, and you must have started to see that there has been a slow price action on the dollar and foreign currency. Okay, so because of that, it's always advisable to shift your focus from majors to trading cross currencies. Okay, so that's why I traded the GBPJPY. So the GBPJPY on the higher time frame institutional order flow seemed to be in a strong bullish institutional order flow on the higher time frame. Okay, we are going to just look at the monthly, the weekly, and the daily time frame. Remember, that's where we do our institutional order flow analysis, because the higher time frames are the main drivers of liquidity. Okay, they are the main driver of liquidity. All right, so this is that higher time frame on the GBPJPY. This is the monthly time frame, and okay, let me just take out all of these things so that we do this together. So on the monthly time frame, you can see we have been in a bullish order flow. Price has been creating bullish expansions, bearish retracement, now bullish expansion. Okay, you can see that the highs of the monthly time frame candles are showing strength in taking out the highs of the previous monthly candles. Okay, so currently, where is the next draw on liquidity? All right, on this monthly time frame, the next draw liquidity would be, you can see there's an old high right here, and there is a relative equal high right above there. Preferably, I'll be looking to see price trade into the rejection block there, or the body of the candle there. Once price trades into that level, institutional order flow has been delivered, and again you can see that you still have a sell side imbalance, buy side inefficiency above that high that is yet to be rebalanced. Okay, so this calls for, this is where I'm looking to see institutions trade into, going into the future after taking out the buy side liquidity pool residing above that level. Okay, we should anticipate to see institutions rebalance that price level right here. Okay, so currently this is where we are. All right, oh sorry about that. So currently this is where price action okay, so that sell side imbalance, buy side inefficiency, that's CB right there above the relative equal highs here, that is the drawn liquidity. Okay, so we are looking to see price trade into that level going into the future on the monthly time frame. So on the weekly time frame, this is the weekly time frame, and on the weekly time frame you can see that price as well is bullish. Price has created a new breaking market structure above that previous old high. All right, so institutional order flow is quite bullish, and we may see price pose some level of retracement into an internal range liquidity right here. Okay, you can see that fair value gap, which price has obviously done that. Price traded into that level, pick up liquidity at that fair value gap, and is now heading for the next draw on liquidity. So this week's candle opening, price opened higher, started to trade down. Of course, if we are going to be bullish, we like to buy in a discount market. Okay, so looking at the previous weekly candle price action, price has traded into the internal range of the previous week candle price action. Okay, so we should start to anticipate price to push up into that higher level drawn liquidity, especially because it's heavily bullish on the monthly time frame. So yesterday I knew that we are going to sell this guy at least into the internal range liquidity. So just go to daily time frame for more clarity. Of course, on the daily time frame, remember, we are interested in seeing market structure sustained in the direction of the order flow. If we are bullish, we like to see bullish market structure sustained, that is higher highs, higher lows. Okay, if we are bearish, we like to see a bearish market structure sustained. All right, we need to see price form lower lows, lower highs. Okay, so you can see that on the daily time frame, market structure, of course, is bullish. Price has formed higher highs. Okay, then yesterday, Monday, right, price traded below. Okay, and then where was I looking at? I was looking at this fair value gap on the daily time frame. Just paying attention to that fair value gap. Should price trade into that level and give us lower time frame confirmation, we like to see if we can buy this guy into higher time frame level. If we do not see that lower time frame confirmation, then we will not be interested in buying this guy. Okay, but we are paying attention to that level as a key level. Should price get to that level and react positively the way we want it to react in direction of the higher time frame order flow, that is a shift of market structure on the 1 hour time frame, they would buy this. Okay, so meanwhile, yesterday, Monday, okay, remember, price took out the high here, higher high, then we need to see price from the next higher low. Then I saw something on the 1 hour time frame yesterday. Okay, what did I see? Immediately price took out liquidity residing above this external range. You see that price gave us a shift of market structure on the 1 hour. You see this price formed low failure swing. Okay, then price broke structure. You see that? So we had a failure swing here, price failing to take out the previous high, and price broke structure below here. That is market structure shift. All right, on the 1 hour. So that means we're going to sell this guy, and if we are selling this guy, where is the drawn liquidity? The low right here, this old low, and this is in confluence with the daily time frame fair value gap that we outlined, remember. So where did I take my sell yesterday? I took my sell immediately price returned into that premium fair value gap or order block with a fair value gap. You see that when you use your Fibonacci to measure the recent range between the high to the low, when once price gets above 50%, that is premium, and we can see that we have a premium bearish order block with a fair value gap. Okay, so that was exactly where I took the shot. I wish I could show you a screenshot of my trade yesterday. I think I will. Okay, so you see that this was where I took the shot yesterday. I took the shot around this level. Immediately price traded into that 1 hour bearish order block with the fair value gap. The rule of entry is you enter at the fair value, the low of the fair value, and this was the drawn liquidity. Okay, this was the trade yesterday. Let me show you that from my Telegram community. I think I posted this yesterday. Those of you who are not in my Telegram community, this is the free channel, Carries Trading Institute. You will have the link in the description of the video. Just click the link and join my free Telegram community. Okay, because that's where I drop trade updates. So you can see that trade GBPJPY. You can see that GBPJPY immediately price traded into that level. I took the shot and immediately price starts to drop. I reduced SL, and this was the trade yesterday. Quite an amazing, straightforward trade. Okay, so what am I looking at today? Remember, I told you once we see shift of market structure here, immediately because price had taken out that old low. Okay, once we see shift of market structure, I would like to buy that guy. I like to buy the GBPJPY. So this was 15 minutes time frame yesterday. You see that price took up the high. Of course, was also a bearish breaker. Price took out the high. Price gave us shift of structure below, created fair value gap right here. So that's a bearish breaker with a fair value gap. That was where I took that trade yesterday. Took the short here, and I bagged quite how many pips? Let me check. I think about almost, you see that, 115 pips on GBPJPY. So today today as well. Once we see that shift of market structure, we like to buy this guy, even though at the moment I'm buying this guy. And why am I buying? Price traded into that level, took out the low here, created a bullish expansion, failure swing this time around. Right, price has failed to take out this low. This is also what we call inverse head and shoulder. Those of you trading retail concept, inverse head and shoulder. Okay, that's inverse head and shoulder. You would agree with me. All right, inverse head and shoulder. Price formed the middle swing. That's the head, this is the shoulder. All right, then price created another expansion with a fair value gap, bearish order block with a fair value gap right here. You see that, this guy. Okay, so that's what I'm looking at. And sorry, this level. That guy right there. Okay, so that's why I'm buying GBPJPY right now. But a more stronger confirmation is when we have the shift of market structure on the 1 hour time frame. So this is also another bullish order block. So price has created a bullish order block right now. I don't want to see price trade below 50% of this bullish order block, which is the order block mean threshold. Okay, should price respect the order block here or the order block mean threshold, this would be a more stronger confirmation that the buy is going to hold and we're going to trade into the drawn liquidity. Where is the next drawn liquidity? You can see all of these relative equal highs here. We call them a low resistance liquidity run because they are going to pose low resistance. Institutions are going to trade into these levels here and that old high and ultimately the 1 hour high right there. That's the trade for today. You see that? It's trade for today. This is my analysis for today's trade, and you should use this to also guide if what you are trading. If you are trading GBPJPY, all right, you can follow up this analysis. For those of you looking to join my private mentorship, there's also a link on the description of the video, okay, that leads you to the private mentorship enrollment link. Okay, so and then those of you looking to get funded with a proprietary firm, which you should be, all right, make sure you use the link in the description of the video to get yourself funded with up to $200,000 with Funder Pro. Once you sign up, pick out an account size of your choice, and if you have a proprietary firm account and you want us to help you pass your prop account, reach out to the link also for prop account passing. Let's talk about how we can pass your proprietary firm account. Okay, especially if it's up to $100,000. That's the kind of account we're interested in passing. Until next time, I wish you good luck, good trading, stay safe.